Hello everyone, and welcome to Unit 5 of our education series, Stock Investing 101. Today, we have 4 objectives for this video. First, what is business? Second, why understand the business for stock investment? Third is, understand how business works. Fourth is, how to value a business. So without any further ado, let's start with what is a business. A business is an organization or entity engaged in commercial, industrial, or professional activities. Every business has one or multiple owners. The primary objective of every business is to generate profits by selling goods or services to its customers. Each business has 3 main components. 1. Core business. Means its product or service. 2. Its owners. 3. Its customers. Let's take the example of a local coffee shop. The coffee shop's core business is to sell coffee, pastries, and other beverages to customers. The coffee shop is owned by individuals who are responsible for managing the business and ensuring that it runs smoothly. The coffee shop's customers are individuals who come to the shop to buy coffee and other beverages. The coffee shop relies on its customers to generate revenue and keep the business profitable. All 3 components, the core business, the owners, and the customers, are important for the success of the coffee shop. The coffee shop needs to provide high-quality products to attract customers. The owners need to manage the business efficiently to ensure its sustainability and profitability. And the customers need to continue to support the coffee shop by buying its products. If any one of these components is weak, it can affect the overall success of the coffee shop. For example, if the coffee shop has poor quality products, customers may not return. If the owners do not manage the business efficiently, it may become unprofitable and eventually fail. And if the customers do not continue to support the coffee shop, it may struggle to generate revenue. Why understand the business for stock investment? When you buy a stock, you are investing in a business. As a shareholder, you have a claim on the company's assets and earnings. Therefore, it's important to understand the business and its potential for growth. Warren Buffett once said, "If a business does well, the stock eventually follows." This means that by investing in a successful business, you can potentially earn high returns. But how do you find a business that will do well in the future? The answer is simple: by understanding the basics of business. Understanding a company's core business, its financials, and its competition is crucial in making informed investment decisions. By doing so, you can assess the company's potential for growth and profitability. You can also identify potential risks and challenges that may affect the company's performance in the future. For example, let's say you're interested in investing in a tech company. By understanding the company's core business, you can assess its potential for growth in the tech industry. By analyzing the company's financials, you can determine its profitability and financial health. And by researching its competition, you can identify potential threats and opportunities in the market. So, before investing your hard-earned money in the stock market, take the time to understand the business. Let's move on to how business work. Let's understand a small business with the help of an example. We'll take a look at George's burger joint. Imagine George invested $100,000 to start his small business. He rented a commercial property, employed 1 staff to prepare hamburgers, and hired 1 manager to oversee finance and operations. Let's take a look at the numbers of George's burger joint. The cost of raw materials per year is $12,000. The operating expenses include rent and electricity, which total $12,000 per year. The salaries of staff and manager combined total $36,000 per year, and the equipment costs $20,000. Therefore, the total cost is $80,000. On the revenue side, let's imagine the total revenue from selling burgers is $190,000 per year. Subtracting the total cost from the revenue gives the earnings, which is $110,000. Suppose the total tax is $10,000. Then, the net earnings are $100,000 per year. Net earnings are also called profit. From the above example, we can conclude that every business has expenses and revenue, and understanding these numbers is crucial for determining the profitability of the business. Our upcoming videos will explain the detailed analysis of various financial ratios. To stay updated, please subscribe to our channel. How to value a business. As an investor, it's important to know how much a business is worth before buying it. This is where the concept of business valuation comes into play. One of the simplest ways to value a business is based on the yearly returns it generates, which is also called return on investment. Let's take an example where Kevin wants to buy George's burger joint. George is asking for $1 million for his business. Kevin needs to evaluate whether it's a good deal or not. The first step is to calculate the return on investment, ROI, that Kevin would get if he invested $1 million in George's burger joint. To calculate ROI, we divide the earnings by the value of the business. In this case, the earnings are $100,000, and the value of the business is $1 million. So the ROI is 10%. It means Kevin will get a 10% return on his invested money. Kevin can use this information to negotiate the price with George. For example, if Kevin offers $500,000 for the business, his ROI will be 20%. Similarly, if he offers $250,000, his ROI will be 40%. In the same way, when we invest in stocks, we are buying a business, so we have to make sure how much we are paying for the company and what return this business will give us. Let's recap what we have learned so far. 1. Every business has three main components: core business, owners, and customers. Understanding these components is essential for the success of the business. 2. When buying a stock, it's important to understand the business and its potential for growth. Understanding a company's core business, financials, and competition is crucial in making informed investment decisions. 3. Business works on the principle of revenue and expenses, and understanding these numbers is essential for determining the profitability of the business. 4. Business valuation is essential before investing in a business. ROI helps in evaluating the business's worth and determining the return on investment. Thank you for watching. Let us know in the comments what is your definition of business and how much you will value George's business and why. If you found the video helpful, please give it a thumbs up and subscribe to our channel for more valuable content on investing.